In this next video, I'll be going through problem 4-11, which is assigned to you in Connect. And as a reminder, the green shaded cells is the data given in the problem. Gray cells are intermediary calculations. Purple cells are data that I have changed from what was given in the problem. And finally, the yellow cells are the answer. Alright, so as we convert using the indirect method from the fully accrued number of net income to an income that is based only on cash flow from operations, we need to essentially take out the accrual. And so when we do this, we have to consider those items that are fully accrued values and those that relate to accruals which result from change in balances in operating assets and liabilities from one period to the next. So I'm going to start by looking at the additional data they gave us. And most of this information relates to the last two sections of the statement of cash flows from investing activities, cash flows from financing activities. And before I begin this, just a reminder that you're welcome to use the class notes if you attended class. Also, you can use the videos and PowerPoints and text and the check figures that are listed in BlackBoard. And those are found under the Start Here Course Resources link for check figures. And also feel free to contact me if you have any questions about these problems. So we start with, under the indirect method, the data given. And the first thing I'm going to do is I'm going to begin the conversion process of this fully accrued number to a number that represents strictly cash flow. Again, your data will be slightly different because I've changed some of the numbers in the purple shaded cells. So we start with net income of $4.8 million because we're in thousands. Depreciation expense of $1.6 million. That is not a direct cash flow. It is an expense that was taken out of net income, but it is not a cash flow, so we have to add that back in. The next component is the changes in operating assets and liabilities. That's why they gave us 2 years of data. So we'll compare the 2 years of data for certain accounts. Certainly, cash account is not affected here, but we'll look at the receivables. Receivables changed from $2.2 million to $2.5 million, and that's a difference of $300,000. The receivables went up, which means more of our customers are holding our money at the end of this year than last. That's a negative cash flow. All the sales are already represented in the 4.8 fully accrued number as they should be. But we have 300,000 more of our sales that have not been converted to cash at the end of this year than last. That has a negative impact on cash flow. So it's a negative 300,000. Same is true of inventory. Inventory, we have $1 million more of cash tied up in inventory, so it is a negative on cash flow. Same is true. Here we had a decrease in this current asset that has a favorable effect on cash flows because we have less of our money being held in the hands of our landlord at the end of this year than last. On the liability side, the relationship is just the opposite as it was with assets, operating assets. Here we have a proportional relationship, a direct relationship. So as payables go up, current liabilities go up, that has a favorable impact on cash flow. For example, if I owe more money to my suppliers at the end of this year than I did at the end of last year, that means my company, is holding more of my suppliers' and vendors' money at the end of this year than last. That has a positive impact on cash flow. Again, they were already expensed as they should have been. But in terms of cash flow, I haven't paid them that yet, so that has a positive impact on cash flow. And that's true, of course, of all payables, all current liabilities. A decrease in income taxes payable, that means that I have paid my income taxes for this year and likely picked up some of last year. That expense is not represented here. Any last year's taxes payable or tax expense. So that tax expense from last year is represented in the previous year's net income. Well, if I paid for that this year, that's going to have a negative impact on cash flow that is not reflected in my current net income. So I need to deduct that. Finally, I'll take all of these adjustments and I wind up with an $800,000 positive effect of cash. So I did, on an operating cash flow basis, $5.6 million. On a net income accrued basis, I did $4.8 million, so I did better by $800,000 on a cash flow basis. Now down to the investing section, these are somewhat easier to understand because we're just looking at direct cash flows. So we purchased new equipment of $4.3 million. That has a negative impact on cash flow. That was given to us in this information here. Now I did change that value. You will not be given 4.3, you're giving a different figure, but I changed it to 4.3. All right, so that is a negative cash flow, right? Cash is going out to buy the equipment. We sold some equipment, that means money is coming in, so it's a positive. So those two items then resulted in a net decrease in cash flow of $3.8 million. Finally, the financing activities. We borrowed money using a note, and how do we know that? We borrowed the $5 million because if we come up to notes payable, we see that we had no note outstanding at the end of last year, but we do have $5 million this year. That means that that's going to be a positive to our cash flow because if, for example, a bank lent us money, we have $5 million more cash. And the second component of financing activities is dividends paid to shareholders. That's generally a liquidation of earnings. Cash is coming out of the company and going out to the shareholders. The company is losing this cash. Net effect of these two financing items is an increase of $4,000. And finally, we'll add these three components together, and we have, for the year, a net increase in cash of $5.8 million. We will look at the beginning cash balance of $2.2 million. We're going to add to that then this net increase this year of $5.8 million. And at the end of the year, we should have a cash balance of $8 million. So when you've completed your statement of cash flows, go back up to your balance sheet and check your balance of cash. If it agrees with the cash balance in your statement of cash flows, then you know that you've done it correctly, or you've likely done it correctly. A couple of notes on just some other problems that you'll see. One is on other comprehensive income. Remember that other comprehensive income items are not part of net income. They're not part of earnings. Yes, they do change our net worth, our equity, but they are not a result of earnings. Only net income captures earnings on an accrued basis. So we have the net income listed, then we have these other comprehensive items, sometimes translation in currency. You'll have one like that in your Connect problems. Just list them below the other comprehensive income net of tax. And why do we record these net of tax? Because the income tax has already been taken out of net income for other items that did produce income or affected net income. These items we would then report net of tax. We take out the tax effect. Now, can you list a separate line item and show the tax calculation separately for each of these other comprehensive income items? Yes, you can do that. It's generally not done. We generally report them net of tax. So you wind up with this line item called comprehensive income. It's not comprehensive earnings. It's comprehensive income. And comprehensive income, using that comprehensive, captures earnings, net income, plus it captures the other items that do affect our net worth, but were not the result of operating income or net income. So our comprehensive income, which includes the non-earnings of other comprehensive items, is $160,000. Then you're going to be asked in some of the problems to calculate these various line items on a per share basis. One thing to note is when they ask you for earnings per share, this is your earnings item, the $100,000. That is your earnings. So you take the $100,000 and divide it by the $200,000 to get 50 cents a share. So earnings per share is just your earnings. It's not your comprehensive income. Okay? They can ask you to calculate income from operations per share. They can ask you to calculate discontinued income on a per share basis. So if they ask you to calculate any of those items on a per share basis, you can do so. Just divide them, whatever the line item is, by the number of common shares outstanding. And again, it's only common stock that's included in this denominator. If you have any questions on these problems or on any of the concepts in Chapter 4, please let me know.